Good evening, everyone. Welcome to Ask Grit, episode number 41. Today we have Alo from our Melbourne office. Good evening, Alo.
Good evening, everyone. Good evening, Naveen. How's it going?
Excellent.
That's good.
All right. So every single week we go through this routine. We answer a bunch of questions which has been asked by our investors via this live stream so that it can add value to you. It can be a boiling question you might have and you might get the answer. You never know. So what have you got, Alo, this week?
Yes, so keeping with the theme of the this segment, we'll be jumping straight into a few questions that I've gotten over the week from a couple of investors and a couple of potential investors that are looking at getting into the market, but they're just a little bit hesitant and there's a few things on their mind. So hopefully we can clarify a few stuff here. So firstly, in regards to properties and the building industry at the moment, some people want to know, do all building prices given to them by the builders include everything? Therefore that they don't have to pay anything afterwards except for just move their furniture into the property, or for the tenants to move their furniture in?
Yeah, it's a good question. Not all building codes will have everything fixed unless it's a fixed price, turnkey quotation or a contract. It's very important for you to understand what's included. Everything you need has to be in black and white. If not, you need to be aware of it. For example, if you don't have landscaping or if you don't have a toilet roll holder in your house as part of the contract, you need to be aware of it upfront so that you can budget for it. As an investor, it's advisable for you to include everything as a fixed price turnkey product when you build your investment home, because you won't have time to go and do your toilet rail holders, landscaping, concreting, driveways, and this and that. And it's an additional cost which you will incur from your own pocket. Whereas if everything is included in the building contract, you can submit that to the bank and you can fund the whole thing. So as an investment property, I strongly suggest that you go for a turnkey fixed price product so that you won't have any headaches. And after all, it's an investment. Yeah, you don't want out of pocket money for your investment.
Wonderful. So keeping in theme of that as well, how long does it take generally to build a standard home?
Typically 5 to 6 months. It's understandable. In the situation we are in right now, there's a lot of timber delays, there's supplies delays. So it can be 6 to 7 months, but typically 5 to 6 months.
Wonderful, correct. So this is actually a question that I get quite a lot. I think, for people that are within the property industry, they might understand the wording and what it may mean. But for investors and those that are not too familiar, they're just after understanding, what does it mean that their land is not titled yet? And why is it that they can't start building before it's titled?
Yeah, when we say title means land has to be ready for you to build a house. When we say ready, you're in that estate where your land is located, the roads have to be in place, your telecommunication lines have to be in place, electricity has to be in place, water and gas lines have to be in place. And when you say title, it means the land developer has completed all the required work on the estate or in that stage of where your land is, and they have gone back to the council and they have got it titled from the titles registration office, which means there's a separate title for your land, and then you can get the ownership from the land developer at that stage. Without that process being completed, it is not titled, it's not registered, and you cannot get the ownership. And without a land being titled and registered under your name, after all, that's going to happen when you settle the land. A builder cannot go and start a project because it's not your piece of land. So your name has to be on the title of the property you're buying or the land you're buying, and then the builder can start building on it.
Wonderful. That's pretty clear. Also, in relation to that, is it possible for the developers to delay the land titling date? And if so, why is that?
Yeah, it is definitely possible for the anticipated title date to be moved, especially It can be because of the weather. It can be because of COVID. It can be because of pandemics. It can be a variety of reasons. If there's an issue with supplies, it can be issue with laborers. For whatever reason, there can be delays. And it is not of best interest by a developer to have such delays, because ultimately they get paid only after settlements of the land. So they are in no means of any interest for them to delay it, but things do happen. And especially in the situation we are right now, there's so much of development happening and there can be delays. We have seen 1 to 3 month delays right across Melbourne as well as other states. So it can happen. You need to have some buffer in place. You need to expect 1 to 3 months of delays, especially in the next 1 to 2 years.
Correct. And now, with the talks of interest rates potentially going up in the next couple of years, people want to know, are there different ways to increase their rental return so that can, somewhat offset their mortgage repayments? Is there any way that they can strategize to try to increase their rental return at all?
Yeah, great question. With the interest rates rising up, and you can't expect interest rates to be this low forever. It will definitely at some point it's going to go up, and the next 2 to 3 years it's not going to be a huge difference. Even if it goes by 50 basis points, it's not going to make a huge difference. But at the same time, as this investor rightly said, there has to be some strategies in place to increase the rent so that they won't have a hit. Two strategies which they can use are, number one, if they want to rent out as a whole property, then you've got to be looking at the rental yields, the historical data, and looking at the rental yields of those suburbs. And we definitely help our investors with that, because we have statistics of each and every suburb all across Australia, so that before you start investing, what sort of a return you can expect. At the same time, another way you can increase your rental returns is you can go for a concept called co-living, where if you have 3 bedrooms with 3 bathrooms, you can do co-living where you have 3 separate tenants in your houses, and where your rental income can almost double. That's another strategy which you can use. If it's an apartment or if it's a townhouse close to the city, if it's in a very good location, Airbnb is another option, where you can, the downside of Airbnb is if a pandemic or anything of that sort happens, if there's travel restrictions, you will have a hit. But now things are opening up. We're opening the borders as well. So Airbnb is another good option as long as your property is in a good location. These are a few things that you can do to increase your rent. And at the same time, if it's a standalone house, let's say, and you already have tenants in place, you want to renew the tenancy contract, you can add some value into the property. For example, you might have a 4-bedroom house. You might not have an alfresco on it. You might spend another $5,000 to $6,000, put an alfresco in, add some value in it. It's a lifestyle feature. This is summer in Australia, so you can get probably another $30, $40 a week on that property. Or if your carpet or your paint is worn out, do a paint of the house, do a new carpet, spend some money on it. You can claim that from the taxes as well. So adding some value is another way where you can get some hike on your rental returns.
Great. And you sort of touched on it a little bit as well. Some people are always interested, and I think this is something that we get quite often. How do you select the best suburb to buy an investment property? Or Grit, for example, how does Grit select a particular suburb to buy an investment?
Yeah, it's a very common question. We have 15,000 suburbs in Australia, and it's no joke to find the best one. What we do is we go through a 35-point system we have. We go through all the required data, statistical data, all across Australia, and based on the client situation, we suggest the best suburb for them to invest on. We look at things like the growth, the rental yield. Those are basic stuff which we look at. And then we look at the income ratio of the people who are in there. And then we look at what sort of proportion are own occupiers versus renters. It has to be in certain percentage If, for example, if you have less renters, it's going to be hard for you to rent out. If you have a high percentage of renters, it's going to be easy to rent out, but at the same time, there will be some downward pressure coming in from the renters so that you cannot increase the rents. So there are a number of checkpoints which we go through with our investors. And it's a proven system. It's working like magic, but it's all statistics. It's all data. Numbers never lie. Correct.
And with the 35 checkpoints as well, I think this answers this next question a little bit. A gentleman actually asked me, why do I need a property investment advisor?
Yeah, a fair question. It's like, if you are to succeed, you need to have the right people with you. It's no difference to property investment. Everyone needs a coach. If you look at all successful people, everyone have a coach. It can be a life coach, it can be your finance coach. Property investment is another art and a science, and you need a coach beside you to guide you through so that you don't make any mistakes. Right. It's similar to that. People choose to do it by themselves. That's perfectly fine. But having a coach beside you in whatever you do, you might do it in 10 years. With a coach, you might do it in 2 years. You can cut down a lot of mistakes. You can avoid a lot of mistakes. It will definitely help you. It's like having an A team beside you. You ideally need a good finance broker. You need a property investment advisor. You need a financial planner. You need a good accountant. It should be part of your life so that you have the right team to take you in the right path and where you want to go.
Correct. And now with the Australian borders opening up, at the end of this month, is now a good time to buy an apartment in Melbourne CBD? I know that in the past 2 years, especially during the pandemic and peak lockdowns, the Melbourne CBD apartments did struggle a little bit. But now with the borders opening up at the end of this month, is it a good time to get back into that market?
Yeah, it really depends on the purpose of the investment. If it's a property investment, again, based on the situation, an apartment might be better, or it might be better off going for a house. But if they want to invest in an apartment for whatever reason, it's definitely a good time to invest, because we have already seen the vacancy rates have dropped significantly. There's so much of demand because the students population have started coming in. And as I said before, the Airbnb market will really flourish because borders are opening up starting the 21st. So apartments, and in terms of the rental market, it's going to definitely go up. It has already gone up, and it's definitely going up. But then again, really based on what the investors' objectives are, what are their goals, and we can guide them further.
100% correct. Now, for those people that that no longer have a mortgage on their investment property, is their rental income taxed at that point? All that positive cash flow, is that taxed?
It is definitely taxed. It will be added on top of their income. Let's say, for example, they're earning $100,000 as their normal earned income. You might be getting passive income of, let's say, $30,000. That means you will get taxed for $130,000 in the next financial year. It will get taxed. You need to have a strategy in place to deduct some of those taxes to some mainly brand new properties where it will be tax efficient.
Wonderful. And now for those investors that just want the property to take care of itself, or for the property manager to take care of it, how does Grit review the performance of that investment property in terms of the rental yield, in terms of capital growth?
Yeah, so we use our system in place. We look at the past data, the future data, the current rents. What are the potentials to increase the rents? What can be done to increase the rents, like value addition into the property? And if there's other unorthodox ways which we can increase the rent, like co-living or Airbnb and that sort of short-term rentals. Right. So really depends on the individual's goals and objectives, and we come up with the individual strategy for themselves. If it's if the person is in a high income pocket, that's not going to be so much beneficial because he will have a ripple effect on taxes. So we'll have to really look at the overall picture, and that's what we do with every single investor to come up with an individual strategy for themselves.
Wonderful. And now another common question that I generally get as well is people want to know, should they invest in a property with better capital growth or something with better rental yield?
Answer is both, and that's what we all need as property investors, but it's not easy to find such properties. So that's why we are here for. We find those kind of properties for you. But if there's a property which gives a fantastic rental return, but if it's not growing, in 10 years' time, any investor will not be a happy puppy. At the same time, if your rental yield is very low and if you're paying every single month out of pocket, that's not going to be so good as well. So we need to find the balance. And again, based on the profile of the investor, based on the objectives, based on the goals, we will find the right mix of the properties to suit their requirements.
Correct. And now the final question that I have here, it might come down to a bit of misconception that some people have. It's people are wondering, should they be buying a brand new investment property or an old home and then use that as an investment and renovate it?
Yeah, there's no right or wrong answer. If it's a high income earner, let's say they're paying $40,000 tax per year, and then if they want to get into the investment property game, answer is go for brand new property. You will get a better tax deduction from your tax returns. There's no point paying $40,000 to the tax man. You can get some money back out of that. So the strategy should be get a few brand new properties so that you get the maximum tax benefits. Whereas we might have another investor who has already sorted out their taxes, but what's important for them is passive income. In that case, it can be an established property with an extremely good rental return. It can be an old property, but they've already taken care of their taxes. So the passive income is the key for him or her. So really depend on the individual's profile, individual's objectives, and the investor's dreams and goals, and we can fine tune it accordingly.
Wonderful. So that's all from my end in terms of the questions that I've gotten over the past week from the investors and those looking to get into the market. I'm sure there'll be a lot more that come in the next few weeks as well.
Excellent questions, Alu. I think we have on the chat here. Yeah, there's one. The question is, I'm getting a land tax bill of about $2,000 in Victoria. What are the strategies which we can use to minimize that? So land tax is an expense. If you have multiple properties in one state, you will definitely get land tax. What you could do is your next investment property you can buy in another state. You probably should look at South Australia or Queensland or Canberra for that matter. And that way, because land tax is a state-based tax, and it's also depend on which company or which individual the property is bought under. For example, even in Victoria, if you have a property under your family trust in one property and you have another property under your wife's name, so that way you can minimize the land tax. But if it is already in place, if you're already paying for it, there's no point in transferring it because you have to pay stamp duty again. So keep it as it is. Buy your next investment property in another state. So buy interstate. That can be a strategy which you can use. Another one, media says Melbourne and Sydney will go down in prices in the next 2 years. Is that true? Yeah, media is there to do what they do best. It's not about Melbourne or Sydney. I mean, Melbourne and Sydney has had a pretty good run, nearly 16 to 20% return in growth last year. So there has to be a correction. That's how the property cycle works, and that's how the market works. So it's not going to be a huge crash or anything like that. There will be a correction, that's for sure. But again, Melbourne or Sydney or New South Wales or Victoria, there will always be pockets where there will be appreciation, there will be rental growth. So you just have to find those, and that's what we are here for. And we help people to find those little pockets where you have the maximum capital appreciation as well as the rental returns. So don't follow too much of media, follow the numbers, follow the statistics, and that's what we are here for, to help you with. All right, I think that's about it, Talo. Great questions, great session. Thanks for joining. Thank you so much for joining, everyone. And we are going to have this every Thursday, 5 p.m. Melbourne time. We were a little bit early because we have to jump in on another meeting. But feel free to ask any questions you might have. And just to remind yourself, we will be having a number of events. This Saturday, we are having an event in Galle in Sri Lanka. We are going to outskirts of Colombo. On that end, the next week, we're having a webinar on Thursday for Brisbane investors. So find us on social media on that one. You can register yourself. The week after, we're having a physical event in Melbourne, in Mulgrave, at the Mulgrave Country Club. Again, feel free to reach us out and we can register you for that. Thank you so much for listening. We'll catch you again next week.
Thank you, everyone.